everybody, and welcome to Trade with Precision free newsletter. My name is Tamar Mehr. Well, this week is all about central bank. There's a huge week coming up for central bank. We've got the Swiss National Bank monetary policy. We also have got the Bank of Japan monetary policy. We've got the Bank of England monetary policy. There's also from the political side, there starts to be expectation that we might see the trigger of Article 50 as soon as this week as well. So that's obviously going to affect the market. And the biggest news that we've got this week is the Fed monetary decision. And there is a very strong expectation, almost close to 100%, that we're going to see an increase of an interest rate in the US coming up on this meeting. Now, we already have that rate rise priced into the price action over here. You can see as the odds for that increase grew higher, we can see here, for example, on gold, this really nice sell-off that we've got. We broke some strong levels. We broke this 1240, we broke this 1220 area, and we're actually bouncing off 1200, which is quite a strong level here on gold. So there is a very high expectation. We already have that expectation priced in. So all eyes are going to be on the statement because we want to see information about futures increase. So are we going to see an increase in June? Are we going to see an increase in December? How many increase are we going to see coming in this year? So all of that information we can look to gauge from that statement. So there's a lot of news coming out during this week. If we'll take a look as an example, let's just have a quick look at the Dow. What we can see here on the Dow is that we're pretty much going sideways. We pull back into the buys on here on the daily. It's a beautiful uptrend, but we just have really small candles and we're just going sideways over here in the buys on. So the market is sitting and waiting and looking to see what sort of information are we going to get from that meeting. So it's a highly volatile piece of news. So as traders or as technical traders, what do we do around these sort of times? Well, we have to pay attention to these big news that tend to move the market quite sharply, and not always can we catch the direction of which these news are going to take the market. Maybe the market will decide, all right, now we've got the interest rates, I need a bit of a sell-off right now. The expectations have been met. Maybe there's not going to be an increase, and then there's going to be an effect on the market as well because all that pricing in will needs to be sold off. So there's a lot of things that can happen from that news, and as technical traders, sometimes it's a good time to sit on our hands and wait until the news come through the market, the effect of the news, and then look for trading opportunities. Another thing is when the market is going sideways like that, what's going to end up happening is that we're going to get chopped out of our opportunities, and even if we cut the direction correctly, then we still can get stopped out, and then the market will go in the direction that we like. Another big piece of news that's coming in this week is oil inventory. So last time we got some information about oils, we've seen strong weakness coming into the market. So there was a huge expectation that the curbing of OPEC production is going to send the price of oil higher. And we started to see here, if we look at the daily, we started to see here an uptrend. But as more oil is coming out of the US and the number of rigs in the US actually rose in the last statement. So now we see there's more oil coming out and less effect of that OPEC cutting the production, and we can see a sell-off of this price. But as we do that, if you look at lower time frame as an example for technical trading opportunities, what we can see is that we started a really nice downtrend over here. There's a bit of divergence coming in here on this lower time frame with that very strong overextension, and coming into a nice level we might see a pullback. But again, there's a lot of effect on the news on the price action. So even if we're looking at technical trading, what we need to do is be aware of those news and have rules around them. Are we trading? How close to the news are we trading? Do we leave a position open? What sort of a position is it already in profit? And therefore, I'm okay to leave that on, or it's too close to the news and the risk is too high. I prefer to close that position. This sort of decision needs to be made before we enter into the market, and we really need to have a look at economic calendar to be aware of all these news that coming through. So this needs to be part of our trading strategy. If we're speaking of a trading strategy, the webinar that we've got for you this week is all about that, is how to learn a six-step trading strategy. So understand not just the reason to enter, the technical reason, is there an opportunity, is it not an opportunity, also needs to come from a risk management and a money management point of view. So even if I got the most beautiful trend, the most beautiful opportunity, if that market is going to be highly affected by big economic news, I might think twice about entering into that opportunity so close to that news. Because as I mentioned, even if I pick the direction correctly, there's chops off, there's a slippage, there's a increase of spread at the time of high volatility, and I can get chopped out of that trade, and then that trade will go in the direction that I've chosen. So that's a very fast trading situation, and we would like to also avoid that from a risk management point of view. So please join us on our next webinar. It's going to run twice. Today, the 14th of March at 9 p.m. Auckland, 7 p.m. Sydney, and on Thursday, the 16th of March at 8 p.m. London. Have a fantastic trading week, and I'll speak to you soon.